Sometimes this market is like the wild, wild west. You never know where that next bullet is coming from. Hi again, Tom Mason with Coldwell Banker Realty, talking a little bit about the Phoenix market today and the weird interest rate moves that we've had over the last week from February 2nd till today. Now, a lot of times you don't expect that good news will actually impact the market negatively, well, the housing market anyway, but in this case it did. We got a large jobs report, many more jobs than were expected, even though those jobs aren't keeping up with inflation. Still, the markets got worried. This high jobs report may lead the Fed to raise interest rates once again. One of the stated goals of the Federal Reserve is to create more unemployment, believe it or not, to reset wages. So way back here on February 2nd, we saw that the 10-year Treasury was down about 3.4%. And we know that the 10-year Treasury is the baseline for mortgage interest rates. And after the jobs report, we now see it's up to 3.7%. And mortgage interest rates, which dipped below 6% for one day, went to 5.99%, are now back up to about 6.4, 6.5, which is not good for the housing market. It makes homes less affordable. Nevertheless, we've been dealing with these interest rates for quite some time, so let's see what's happening in the Phoenix market. And this is a follow-on to the last video I did showing how sellers markets have increased in Phoenix over the last few months. So in the last video we talked about the increase of sellers markets in the Phoenix area and the reduction of buyers markets here in Phoenix. And if you recall, anything over 100 is a seller's market, anything below 100 is a buyer's market generally. The higher it is above 100, the stronger it is for sellers. The lower it is below 100, the stronger it is for buyers. So here's an example of what we looked at before, January 12th, where we see Fountain Hills, Paradise Valley, Cave Creek, Chandler, Scottsdale, Phoenix, even Glendale above that 100 mark. Now Mesa, Tempe, Avondale, Gilbert, Peoria, they're all sort of hovering around that 100, so it's somewhat of a balanced market there, but the trends were all going up. What does that look like today? Let's take a look at February 2nd as we wait for the next report to come out. Now we see that from Mesa on up through Fountain Hills, it's stronger sellers market for those areas. Now we see a downtick here, but it's ticking down from 172 to 161, still significantly above 100. This one, Paradise Valley, is from 153 to 149, ticking down, still significantly above 100. Meanwhile, below 100, we barely have Surprise, Goodyear, Queen Creek, Maricopa, the city of Maricopa, and Buckeye. But look at all these green arrows as these are improving as well. These are going upwards, which means these are heading back toward either a neutral market or perhaps in a few months back into a seller's market. And as the spring selling season comes up, we expect to see these move up back into a seller's market. So why is that going on? So what other indicators can we see in the Phoenix market? Well, we can look back in December and we can see that we had over 17,000 homes that were on the market, and they weren't selling very fast. Only about 5,900 were going under contract, being sold. But when we move to February, we see we have about 1,500 fewer homes on the market with about 3,000 more under contract. So that disparity between what's listed and what's under contract is shrinking, meaning that inventory is being bought up. Each of these artifacts are snapshots for one day back in December and in February, but it gives you a good idea which way the market is moving here in Phoenix. Again, we have 80 to 100,000 people moving here every year, and we're 100,000 homes short. So eventually, those homes are going to sell one way or another. Now let's take a deeper dive. Phoenix isn't one big market. It is a conglomeration of a bunch of little markets. Here you can see different zip codes that we can look at to look at what the market's doing in each. So let's say we'll take 85015. This one's not particularly high price. We can see though that from last month it's moved up towards a stronger seller's market. See the medium list price there. And we can see right now for the past 2 months that price per square foot has stayed relatively steady But in the last 7 days, that's the dotted line, it has actually shot up. So those are trends that we like to look at and pay attention to. Looking at inventory, see inventory's staying pretty steady for the last 2 months, although it's down year over year. So fewer homes are on the market, and that hasn't changed. They haven't gone up in the last 7 days, they've actually gone down. Take a look at downtown Phoenix. Not enough inventory to actually do a report. Look at another one in around the middle of Phoenix. We see it's cooled slightly, but still in a seller's market. $767,000 is the median price in this more expensive part of the city. And here we see the trend line in the solid is 90 days. The dotted line is 7 days. So the 7 day will be a lot more volatile than the 90 days. In the 90 day, we like to pay attention to a little bit more just because it gives us a longer look at the trends. So if we move to Glendale, Arizona, see how many zip codes there are available there. We'll take a look at one or two of these just to see what the trend lines are for Glendale, which is in the outskirts of Phoenix. See from last month, it's actually become a much stronger seller's market. 413, median price there, so less expensive than Phoenix. There's more competition for these houses out there on the suburbs of Phoenix. And you can see price per square foot over the last 7 days has really shot up, but the 90-day trend line is still pretty flat, but trending upwards. List price, 90-day is slightly declining, slightly. And from last July, we can see the downward trend that occurred in this market. So once we get to the very end, if you see that dotted line, the dotted line is trending back upwards again. The spring selling season is coming, so we may see that continue to trend upward on median list prices. So let's take a look at Peoria, Arizona. In Peoria, Arizona, a little bit safer neighborhoods in most of Peoria. A little bit more entertainment and dining, shopping centers. Take a look at these. It's slightly above in the seller's market, a little higher price than in Glendale. If we look at condominiums, see condominiums, there's not a lot of condominiums. There are only 4 in inventory here. These are mostly single family homes out in Peoria. So we'll check these homes again, and we can see inventory of 221, quite a bit is available there, and a slight seller's market once again. When we look at market action since June, when interest rates started going up, you could see the drop from June. But in September, it started to, sort of moderate, and then it flattened out here in the last 2 months, last 3 months, where prices have been flat, pretty flat. The dotted 7-day price picture shows up and down trends throughout this area of Peoria. Another one we'll look at. This is the main bulk of Peoria. And this is moving into a stronger seller's market now. We can see there's lower priced single family homes out there, and so they're more affordable. People are coming out to take a look at them. Again, we go back to February and then focus on June 2022, where we see the big drop all the way down to December. But right around December, we start seeing a flattening of the median list price. Once again, those prices aren't dropping any further, or not significantly, during these past 90 days on the average, at least what the trend line is showing us. And since we're heading into the spring selling season, we can probably expect those median list prices to go up. We'll see what happens as far as buyers and sellers market at that time. Let's take a look at Scottsdale, Arizona. Scottsdale is known for its higher priced properties, but in some parts of Scottsdale, there's actually inexpensive properties. We'll look at the more expensive areas just to see what's going on there. Median list price of new listings, 1.125, whereas the past list prices were right around 900,000. Still slightly a seller's market. Once again, we see since December, prices have flattened out, but in the last 7 days, they've actually gone up. Only about 32 homes in inventory in this area. Another more expensive part of Arizona is Fountain Hills. We'll take a look at what's going on in that environment as well. So here we see about 96 in inventory. We see 790,000 for the new listings coming out. Slight seller's market out there in Fountain Hills, even at these higher price points. And we see an upward trend. And we'll go back a little bit, take a look at historically where the drop began back in June. And as soon as we hit December, these prices started to level out and then actually began to climb in Fountain Hills. Fountain Hills is one of the strongest markets out there, 161.5 on the Comfort Market Index, well into a strong seller's market. Back on February 2nd, we had interest rates drop below 6% to 5.99, but now they're back up to 6.4%. If you locked in a rate at 5.99, and furthermore, if you bought that rate down another 2 percentage points to 3.99, you're in a good position to make a purchase. So what's the best thing you can do is get a hold of a realtor who has a lender they work with and start watching that market. Watch the fluctuations in the rates. The next day that we can look forward to is February 14th to find the year-over-year CPI report. See if that brings the interest rates back down again. Certainly we think probably by May, we hope to be in the 5s. And again, not perfect, not great, but if you buy down from the 5s, you're in the 3s. That you can afford a much more home at that point. And you won't miss out if you already did miss out in 2021 and the beginning of 2022. The first half of 2022 anyway. The second half was a mess. And so the key takeaway is really this. Position yourself to be able to move when you want to move. If you're looking to buy, contact a realtor, and through the realtor contact their lender, become pre-qualified, and then when rates drop, you'll actually be in a more comfortable position. You'll actually qualify for more. It will be easier for you to receive financing. There won't be that much of a debt-to-income strain between what you have and what you'll need to borrow. If you need any help or you have any questions, please give me a call.